Hey, good morning, everyone. This is Julie. Got a treat for you today. This is the opening range and PT breakout system. So, my opening range indicator is focusing on allowing me to see the nighttime versus the daytime session, and I can clearly see where these breakouts occur because when traders, hedge funds, prop traders, see this Globex range break on the equity indexes, that's their signal for runner runner and to try to get to those higher time frame levels. So just knowing what that opening range, high and low, is so that you can trade that Globex breakout is amazing. And things that you can do with this indicator, just take your measurements going from the midpoint to the end and maybe just guesstimating that you might want to try to reach that distance as like a target to trade to one time. Looks like this was a 2. Yep, one or two times. And that can be an algorithmic way to trade the market. Um, Also notice that when these Globex ranges are big, um, or they start spreading apart during Globex, that's a good time to continue expanding that Globex range out. That does not always mean that the RTH, in fact, is going to match. In fact, this RTH can be the halfway between the midband and then peter out a lot of the times. So when you have a giant Globex range, you can expect your 1 hour initial balance. Looks like that was 2 times almost, but sometimes it will just be the one time. So you have to be very careful. If it's a giant, like right here, see it was one time. Pretty close. How about that? Pretty tricky, right? But anything that you can think, measure and look at that, measure and move, measure and move. Um, and then they take these distances in the RTH setting between the midband of that 60-minute range and the 1 hour high-low to trade down, target reached. So a lot of traders will do this, get their target, and either decide to flip it to come back or, keep going. And so just keep this in mind when you're trading where you are in relation to the opening range of the Globex, the midpoint, and the RTH opening, and the midpoint, and where these range breaks occur on the respective high lows of the 1 hour IB or the Globex, because either of those chart locations can be a nice little breakout opportunity directionally. To make this even better, we can put the PT indicator on it, and I have a template for the opening range right there, 1 hour IB. And this also gives some very good levels to trade to. Um, Even if you're just discretionary trading, this is such a nice little template to have the 1 hour IB levels when you're trading this equity index, and it does start breaking your range, giving you, these algorithmic locations to go to. And speaking of algorithmic levels to trade to, um, we can add the daily range. Look at that. We can add the daily range to this to understand when price breaks through one of these standard algorithmic levels, is it trying to get to a higher time frame? And that answer a lot of the times is absolutely. And if we know where those higher time frames are hiding out, we can start putting our trade plans together even better. So let me add a couple more. That was the close. Here's the open. And then you can also get weekly and daily. Put it weekly on here, or Globex. Put the Globex first. And then the weekly. So you can nest as many ranges as you would like. Um, just realize that if you use the higher time frame, you're going to need to put more days on your chart to get the level to print. Here we go. And so now you can see why price goes to these levels. Here we go. I just generated my back test again. So I have coded this into Bloodhound for us, and I'll be giving you guys this Bloodhound template. And for those of you who do not have the opening range indicator, you can just either get the opening range indicator, or you can just take that solver off and just use the JATS PT indicator. It'll work on either one. I like to use them both with an OR node. So, like, sessions like this are just, manna from heaven. Um, and it provides a decent framework to try to get positionally, behind the trade. My logic, I'll give you the customer when you get the template, get the indicators, I'll give you this template. And for the Blackbird, to make this work, I've got it set up as a volatility envelope. So I pull my entry logic in, and I've got an exit logic. And so I start taking a percentage of the PT1 1 hour IB. So this is set up for use time range, add the PT2 indicator into a OCO with entry price, and then you put the JATS PT2 indicator in. No changes to it until you make the changes time frame true, and then 8:30 to 9:30 for that 1 hour IB. And you can use any range you want, medium or the full range. This is set up for the medium, so medium volatility, for instance. And there's an advanced technique that I'll be showing you later in training, how to set your volatility thresholds. But for now, suffice it to say, the profit targets are set up for the PT2 on that time range, and that's the medium volatility. And from that medium volatility time range, I'm only taking low-hanging fruit. I'm taking these low multipliers, percentages of that range. So I keep telling you guys to think about, if you knew the train was leaving the station and you're going from platform A to platform B, you have your high-low distance. If you want to make sure the train gets to the target without running out of steam in its locomotive, you can take small percentages along the way and book that trade to make sure you've got those profits and let the runners go. So I'm going to show you two ways that I've set this up. Just one contract each. uh, gets you a nice um, profit target. Of course, there's a lot of contracts, and but we're using that calculated distance from the 1 hour B that dynamically adjusts. So the reason we're getting the results is because the strategy is picking up the actual volatility of the time frame, and so we're running these volatility envelopes. So the way I do it would be to use your furthest target with the lowest number of contracts, and then just start adding in contracts coming up. So 5, 4, 3, 2, 1, and you're getting 5 off at the lowest, the fastest distance, then 4 off at the next fastest, 3 off, 2 off, and 1 off. So you're going in a structured manner that way. And if we reload the Ninja script, we will see the performance rate, increase substantially. Um, because you're hitting your targets, it's like you know that you're getting into those targets. And then there's another trick I want to show you for even fine tuning it and optimizing it even further from there. So here you've got $1 million back test. But you can see that the largest losing trade was $5,975. So definitely put this in a micro account. So you would divide that by 10. You would divide this amount by 10. That's how the micros work. They're 1/10. So um, it's a great way to introduce yourself to multiple contracts and be able to hit ranges. So that would be $133,000 instead of 1.3 million. But if you can afford the contracts, definitely this is definitely a way to consider trading. And then you can also come in with other logic of your own um, to manage risk, carrying these second contracts, making sure maybe some trailing rules or something like that. Um, you could also come in and look at your results. Go back to your trade performance and run your analysis and see what you can do to mitigate some of these losses. So, as you can see, there was some big substantial losses along the way. You want to definitely not use this unless you have a micro account that you're trading it in. Absolutely. Or come in with other risk management protocols that I have not provided for. It's a very simple template. I really encourage you not to use it as an algo right out of the box, but just as a method of seeing how I've constructed a template using the time allotted in between our initial balance level. So out of this 121 points, it's kind of rich for a lot of budgets. We can take percentages out of it. So we can take stabs out of it, um, trying to get one time the range. If you just want to trade one time to the range, one time the range, one time, we can do that also. And I'm going to save this and open another version of this. And I'll show us how to do that. So same opening range breakout. Go ahead and put I'll take the exit off. We'll just do a one, either hit it or not. And so the profit target we'll come in and put the PT2 indicator, set it to 8:30 to 9:30 on the open, and one time, or you can do 0.95 to be, into your statistics levels, 1 or 1.02, whatever you would like. But that'll give you one time the range, and for the stop loss, do the same thing. -1. And realize that this isn't from the line down, it's from the close of the bar, leaving the boundary line of the one. So you might want to go in and just take like one standard deviation of that instead of wanting the full range, and that way that'll approximate your trade. And then let me go back and set this to one time. Yep, one time, and rerun it. So this will be the one and done trade. If you get a breakout of the level, just saying I'm going to flip the dice, either, trade it to the level or not, and see if there's more winners than losers. And they were just about split even. That's something that you would want to work on for a strategy. There were more, profits and losses, but that's probably not something that you would want to trade. Just to want it done on a regular basis like that. Um, and you can come in and change your levels and work your volatility envelopes and get used to making these adjustments and then seeing what you can do to improve a strategy. So my goal of getting this information to you is giving you ideas, fresh ideas on how to trade these breakouts, how to identify them. Are you taking them from a daily range or a Globex, or like in this case, just a simple 1 hour IB, either off of the prior Globex or the current RTH, and having either a volatility envelope or a one and done type trade. One and done, either you hit it or you don't. That could be a method of trading this. Obviously, you'll probably be more interested in the first method of the volatility envelope, and put it on your micro account. And that might be a very good way for you to make some day trading income, trading these opening range breakouts in a micro account. So I will have the indicators and strategies available. And also when you're trading this, just as a caveat, you can turn the strategy on and off while you're sitting here during the trade session. You can see that it's getting to like a big standard level, like this big thick like white line. That's the weekly one. That is a pretty standard, level. So you can elect to trade to the level target and just turn it off, or use the algorithm of the partial ranges if you're not quite sure, what your options are. And this You can also, minimize the number of trades that you want if you would like to do that. You can elect to go home with $1,000. So if you receive a $1,000 profit loss, stop trading. So we can do that right here. $1,000. Oops. There we go. Stop trading after, well, let's make this 1,100. There we go. And now we can say 100. So more amount of profit lost 100. So stop trading and enable during live trade. And so then you could recheck your results and see if that improved it any. Um, Before I do that, let's go back and look at this real quick. So right here it says the average winning trade is 1,700. So that 1,000 should be reachable. In fact, it might be too low. So why don't we change that money management to 1,700 and stop trading after 100. And that way it'll be fully optimized. And let's rerun it and see what happens. But I like having the color coding on it, guys. The purple and the yellow just really stands out for me. Makes it real easy for me to see what's going on in the time session and where those halfbacks are. They're so instrumental um, with this methodology. I'm interested to see what this did. No, it didn't improve it. Well, I say that flippantly. Let's take another look. Oh, that was my other one. Sorry. You weren't supposed to see that. Um, okay. So here we've got trade one with the watermark. Okay. And if I remove the watermark, I want to compare the number of consecutive winners to losers, the percent profitability, and the profit factor, and see which is better. Limiting the number of dollars that the strategy can reach, or let your um, winners keep running. And we'll take a peek at that right now. So it looks like the profit factor is about the same, 120s. The percent profitability 50, 53, 54, 52, 25, 25, 26, 25 versus 46, 25. So we had many more long winners than we did limiting the profit factor. So the longs kept going. So we were limiting the longs. And so I would not limit the profit factor. So we'll just leave that off. And put this in a micro account and run the algo on it. Again, this is, you can do this per um, contract or instrument, NQ, ES, Russell, YM. They all have the opening range strategy. So play around with it. Let me know what you think. I'll have this available uh, on the website for um, Shark Week. And y'all let me know what you think. Thank you so much. Talk to you soon.